YourTradingCoach.com. In this video we'll look at the final 3 candle reversal pattern, the Morning Star. The Morning Star is a 3 candle reversal pattern occurring at market bottoms only. So it's a bullish reversal pattern. Basically the opposite of the evening star we discussed in the previous video. The price action leading up to a morning star must be a downtrend. Ignore the pattern in a sideways trend or an uptrend. Price must be trending downwards. The first candle has a red real body, continuing the trend in the downwards direction. The second candle ideally gaps down at the open, although that may not be relevant for some time frames or markets, as we've discovered with previous patterns. The second candle will have a small body of either colour, so maybe either red or green, small body in comparison to the size of the body for the preceding candle there. The second candle is the star referred to in the name Morning Star. And the third candle then ideally gaps up from the second candle, isolating that second candle below the first and the third. The third candle has a green real body and penetrates well into the body of the first candle. The further the penetration, the better. And of course, closing above the high of the first candle would be most bullish of all. Confirmation of the pattern is price trading above the high of the third candle, or the green candle, in this area here. As always, more conservative traders may seek additional confirmation through price closing above the high of the green candle, or even closing above the high of the whole pattern. Whatever works for you is fine. Let's consider the psychology or the sentiment of the pattern, the Morning Star. Who is in control, the bulls or the bears? The bears are continuing the downtrend by forming a long red-bodied candle. Okay. The gap opening down to the second candle additionally appears bearish, but the small body of the star then shows a possible loss of momentum. The bulls then re-enter the market in force, ideally gapping up from the star to open here and driving price to close well within or even above the body of the first candle. The higher the close, the more decisive the victory of the bulls over the bears. Let's use the process now of candle addition to see how a morning star 3-candle pattern resolves into one single equivalent candle. As we've seen before, this is a useful process for confirming the bullish or bearish sentiment of any multiple candle pattern. The group of 3 candles in the example shown here, which is the morning star, opens at this point here at the start of the red candle, moves to the high, low, close, gaps down for the second candle, the star, moving to the low and close, and then gaps up to the third candle, the green real-bodied candle, closing on the highs here to close out the morning star pattern. Using the process of candle addition to create one single candle for that 3-candle time frame, we find price opening here at the top of the red real body, equivalent to the open of the red candle here on the morning star pattern, moving to the highs, which is equivalent to the morning star high, down to the low, which is equivalent to the morning star low, and back to close at the base of the red real body here, which is equivalent to the closing price of the morning star here. In this case, the morning star is a bottom reversal pattern that is equivalent to a red hammer. Note that it's not always red though. Had this green candle, the third one in the morning star, been even more bullish and closed above the morning star open, the hammer would have also closed above its open, resulting in a green hammer, which is of course even more bullish than the red hammer. Let's look at some examples. British pound, US dollar, 5-minute chart. Downtrend, showing a slowing of momentum. A final thrust right down to the 1.9700 round number level on a red candle, followed by a doji. Indecision, then a green candle. The presence of doji in the place of the second small body candle is a variant of the morning star called a morning doji star pattern. Confirmation through price trading above the high of the green pattern leads to reversal of the trend to the upwards direction. In this case, the presence of the morning doji star right at an area of round number support leads to a great change of trend. Euro US dollar daily chart, a previous area of support, an accelerating move down to that area of support, pausing at a smaller red body candle, followed by a longer green real body, and confirmation through price trading higher, a nice morning star pattern at an area of support, leading to another good trade in the long direction. And the final example, gold 1 hourly chart. This red horizontal line that you see here at the 930 level represents the upper boundary of a previous area of resistance between 925 and 930, now expected to provide support. Price trended down right into the area of previous support on a nice red candle, followed by a narrow range green candle with a lower shadow rejecting lower prices, and then a third candle, a longer green candle breaking back above the area of support, price trading above the high, confirming the Morningstar pattern, leading to a new uptrend. Cool stuff. That's all for the candlestick series at the moment. I hope you found great value in these short videos. I welcome any comments or feedback, so please get in touch with me through the Contact Me section of my website. It's a little button just here on the upper menu. If you're interested in taking your candlestick trading beyond the basics we've discussed here in the videos, further material will be available in future only through my website. You'll be informed of their release through the newsletter, so if you haven't signed up, enter your details over here in these boxes on the left so that you don't miss out. I hope to see you there. I'm Lance Beggs from www.yourtradingcoach.com, wishing you, as always, happy candlestick trading. Cheers.